The commercial property market has been talked about more and more, and I just purchased my first commercial property. And is it your first as well?
Yeah, first one.
There you go.
Yeah.
So both Nevada and I have purchased our first commercial properties.
Soon to be neighbours.
Yes, that's right. And so we want to unpack for you why we purchased our first commercials, what our plans are with commercial investing going forward, and break down some of the numbers and specifically why we like this deal or this location and the upside of this area. So maybe give the viewers and people listening a breakdown of what we bought, where it is, and what it looks like.
Yeah, for sure. So we bought a off-the-plan industrial...
Sounds like a bad deal already. Off the plan.
Industrial build site in Shayla Park. The thought around it for us is, we're going to use it for our business. Our team's growing and expanding. We want a bit more space and we want to be ahead of the curve and have enough space to continue to grow if we choose to. Originally, we were looking at leasing offices or buying offices. And my concern with that is I don't personally feel that a office is a good investment in the current market, particularly in the areas that we're looking at.
Yeah.
Higher vacancy rates, all this sort of thing.
It's not like you're getting foot traffic in areas so Shayla Park's in Logan. I've got an investment property in Shayla Park as well. It's between basically Brisbane and the Gold Coast.
Yeah, right. So pretty much smack bang in the middle almost.
Really well located along that M1.
Yeah.
But they're in that Logan region, office is not really, in our opinion, an asset. As a buyer's agent myself, I wouldn't be putting clients into the office space in that region.
That's right. And even though I'm thinking it's for business use, it's always good to have that plan in mind. Okay, what if our business outgrows it or we want to go back from working from home? I don't want to own something I feel is fundamentally a bad asset to own. So the thought around this premises was, well, if we don't use it, end up not using it for the business, it'd be quite easy to get a decent tenant in that property. And longer term, if we just hold it and treat it as something completely separate, it is a good asset to own regardless. So having that contingency in that regard. And yeah, comfortable with the area on that M1 corridor through there. Industrial properties done quite well, and I sort of think we'll continue to do so. And the thought with off the plan is it gives us some time to prepare and get organised to get things in place. And we're not quite ready to make the move yet, but when it is due for completion, which is late next year, probably will be late, but see what happens.
That's all right. It's good for me, mate.
Yeah, exactly. And in that time, hopefully there's some growth. Even if there's not, that'll be fine.
Yeah.
And it'll be, a good business opportunity, but also a good opportunity to get exposure to that asset class as well.
Yeah. And I agree with you on the sentiment. Industrial, as I expand my portfolio from resi into more commercial over time, I'm not jumping fully fledged into the commercial space personally. I'm 31 at this point in time. There's a big runway for residential investing, in my opinion. Tenants tend to be, yes, you get 3 or 5 year leases in the commercial space, but there is a lot more vacancy risk, 3, 6, 12-month vacancies.
And the demand's completely different too, right? Like businesses needing space is a lot different than people needing a place to live.
Yeah, and if that business goes under, it doesn't matter how watertight your lease is, good luck getting the money out of them.
Yeah. So it's definitely a different risk profile for sure.
Yeah, and so for both of us, I paid around just shy of $1.1 million for my unit. Did you pay similar money? I'm not sure.
I think ours was slightly bigger, just to show off. And
here we go.
Also slightly more expensive.
On, what's your side? I'm packing 170.
A couple extra square meters, mate.
I think mine's 175 with about a 35 mezzanine space.
I think ours is 189.
Oh, here we go.
Yeah, it's just
189. Come on, man. All right. You might have a few more mortgage brokers than we do have buyers agent and associates, but
it's just room for the pool table. That's the main objective. But.
Exactly. I'll park my 1974 Mazda in the front of our office. My rusting car. Anyway, one of the cool things about this project is it is a new build. So neither you or I would probably typically play in that new build space, but from my point of view, it looked like a really good opportunity. Yes, I paid at 1.1 mil. And it's a new build off the plan. It's a year away, but it's infill. So this off the plan project is not happening in the outer suburbs, not 2 hours west of Brisbane or where there's not housing supply around
it. It's really a prime location.
Yeah. And so when you were looking at it, did you think that was one of the key reasons to buy that type of unit as well?
Absolutely. The location from an investment point of view, also from our business point of view, it's a very central location to the team. We have a lot of clients and exposure in that particular area, but also longer term, have a lot of comfort in the demand is going to be there in that area for business owners wanting to rent spaces.
Yeah.
Like we're going to fit it out as an office space, but the building has the versatility that it would be suitable to be fitted out for a trade business or a manufacturing business,
apparel company,
import-export business,
coffee roasting.
Exactly. So it's very versatile in that space. So we're not industry specific. And to me, that mitigates a little bit of the risk. Like buying a commercial property that's only an office or it's only suited for hair salons.
Yeah.
You're relying on that industry to continue to do well.
And foot traffic is a requirement in those locations. A great thing about industrial zones is it's driven by vehicles. We know that people are going to still be in their cars out and about for work. And I'm the same. I'm looking at, we both got dwellings at the front of the complex too, which I think is a big win because that we bought, we're talking about our sizes, but there are some small ones in the complex too, which is great. You need diversity of stock.
And hopefully there's some good cafes around.
Yeah, we're hoping, mate, a lolly shop, a cafe. What else can we get in there? Boutique Mexican restaurant.
We can dream.
I doubt that, but I'm sure there'll be some cafes pop up in that hub or that space. For me, it's about the longevity as well. With commercial, you're going to get those, even though we're paying ourselves, essentially. I bought mine through a trust, to give full disclosure. I bought my building through a trust with a corporate trustee, and then my business is going to be the tenant, which is quite common. People either use their super fund or use a corporate trustee to purchase these types of assets.
And we're the same. So myself and my business partner set up a SPV or a separate unit trust.
Just to give you full context, that's a special purpose vehicle, which is a type of way you set up corporate trustees and trusts.
And that's set up as a unit trust, and we're 50-50 in the business, so we're also 50-50 on this project.
Awesome.
And the good thing with keeping it separate is, let's just say one of us wants to buy each other out in the business sense. This is a completely separate asset.
Yeah.
So they can stay involved in the property. The business is the tenant, which pays market rent.
Yeah.
And it can still be kept as separate.
It's a separate investment.
Correct. Yeah.
Yeah. And the lending from that is pretty clear. It's a standard kind of commercial lending process. So, talk people through, you and I both used a unique thing in a deposit bond to keep the cash down a little bit lower. Talk us through that deposit bond and how that works. And then the funding side, you can talk them through what I'm planning on doing and go from there.
So the deposit bond is a product that you can utilize, which gives the seller the guarantee of the funds. So it's an insurance product in lieu of you actually having to front in the cash. So I know for me, the deposit was give or take 100 grand.
Yep.
I would much rather use that 100 grand in our business to put on more staff, more resources.
Working capital.
Help service our clients. That's more of a priority for me in the short term. I also, off the plan, there's a little bit of hesitation with also parting. I think this is a pretty reputable developer, but still,
it's a risk.
Parting with 100 grand. So you utilize a deposit bond, you pay a premium to utilize that product, and the seller gets a bond which guarantees them. So if you, for whatever reason, don't fulfill on the settlement, that insurance provider will pay the seller and then chase me as the person obtaining the bond for the money.
Yeah, for sure.
So the seller gets a bit of a guarantee and certainty, which is what they're looking for with the deposit. And we, for paying a premium, get to not part with $100,000.
Stump up 100, 110K.
Yeah.
Because it's a 10% deposit when you purchase these types of assets.
Yeah.
Because they need that assurance.
As a starting point, and then, to complete a little bit higher. So in this particular one, when it comes to the lending side, we're going to likely end up with a 70% lend on this particular asset. It's kind of what we're expecting to land. And that'll be funded with a combination of equity from my property and also my business partner's property, if not cash, depending where we're sitting at the time, a combination of the two. And because it's a owner occupied in the business, in the sense that the business is using it for its purpose, the lending criteria is a little bit less stringent in that case. There's some more options open up with some of your tier one lenders as well.
Yeah, business banking has different rules than the residential space. So if you can get into business banking, you can get in the commercial space. Not that it's a wild west, but it plays outside of the rules a lot of people would know and understand.
It's a bit more common sense. Goes both ways. Like it's more a little bit, the character piece is a little bit more of a component. Whereas if the business has some unique elements to the income, if it makes sense, that business bank has a bit more discretion in that regard.
Yeah, and from my point of view, to fund a 1.1 mil purchase in the commercial space, I'm planning on ripping out as much equity as I can and using the business banking to get access to that equity to fund the 30% that I need, or 35% really, that I need for purchase price and closing costs. And the bank will bring 70% because my business, you can essentially do it as a lease stock loan really, where the business is funding 70% of the debt. And so you need to bring the remaining 35% to settle on that property.
That's right. And also in this case, like I mentioned, there's the investment benefit, getting exposure to the asset class. But for us, having the ability to expand the team, have a good working environment for the business, being next to you guys. There's also my accountant, which is moving next door to us as well.
Yeah, it's huge.
I think there's a lot of upside with all those elements as well.
Yeah, so my team's currently based in Greenslopes, Nevada's not far away in Loganholme. But that's the exciting thing, you know, our business in the buyer's agency, we cover Southeast Queensland now. So we're covering up from Moreton Bay down through the Gold Coast, out west to Ipswich, Redlands, Brisbane, Logan as well. And these guys help anyone across Australia. But if you're flying into Brisbane and you want to meet myself or you want to meet the brokers or vice versa, then we've got Jackie, our accountant, next door. So it's going to be a hub where you can come meet everyone involved in that process and you have it essentially under a couple of roof lines next door to each other. And I think, personally, I think we've chatted about this offline, that the in-person experience of work and relationships are going to become more and more important the next 5 years. You know, I didn't love when I was a chartered accountant being in the office 50 hours a week. You know, if you're one of those people, good luck to you. I don't think either you or I like that. It's about the space to work creatively, but having the flexibility with that work environment.
Yeah, I very much subscribe to the hybrid approach in business, having the place where you can workshop a deal as a team, collaborate, help each other out, meet clients in a nice environment, but then also have the flexibility with, you know, working from home and getting stuck into it is certainly a good thing. But in this case, from a client point of view, I can see it as a big value add to go and have in-person meetings with multiple parties involved and got to get all your answers in the, you know, in the one trip,
one space. And for my business, I'm looking at, you know, if we move in around January 2027, we'll move to that more hybrid model. I'm thinking like a Monday, Wednesday, Friday, or a Wednesday, Thursday, Friday, depending on what that looks like. Which means that we're getting the whole week covered. Yep. And my team's out in their cars all the time, driving around Southeast Queensland. So it's a good place to come back to and regroup.
And how that translates in a benefit for a client, like if I'm a client, I'm thinking like, well, how does this impact me? The reality is that if we have a team hub where we can collaborate, if I have a particularly tricky deal and currently we have 12 brokers in the team and we're there, I have 11 other very experienced people which I can workshop the deal with.
Oh, yeah.
So you're getting the value of that.
It's a full team in terms of the sourcing and the brain power behind decision making.
That's right. So you're leveraging all of that just through like the broker you're working with. And then expanding on that, if it's an accounting question, to have the accountant next door. If it's a more property specific question, to have you next door again.
Yeah, that's right.
That only is going to make, you know, more synergistic on our end, so able to make us deliver better results for the clients, in my opinion.
And I think that's the future of property and investing in the commercial space, is that those office spaces are going to fall away a bit more, maybe be turned into more residential developments. The industrial areas have so much flexibility to be office or lifestyle. Who knows? Maybe I'll bring a home gym into the business. Probably not, but
you do the gym, I'll do the sauna.
Yeah, that's right. It's that opportunity to have a creative space. I'll definitely have a podcast studio, for example, where we have a really dedicated space, full desk set up in that upstairs area and do a full fit out. And it's nice to have those dedicated areas for specific work tasks. And so if you're investing in commercial property, you're probably expecting in this type of deal to get a 6 to 6.5% net yield, which means if you paid about 1.1, you're probably going to get something like 65 to 70K a year of net rent. As we spoke about earlier, there's risks involved with that. But I certainly know at the Innova project where we bought, we'll show you some footage. I'm sure it's already been shown throughout talking about this video at the start. But looking through the footage of their render and designs, these types of projects are unique. If you're not going to buy a new build, buy something like this, where you've got good floor plan, you've got flexibility of options with the site. And the one thing we both love is the low maintenance aspect. It's got lots of options, but low maintenance.
That's right. And if you can buy something with an existing tenant, with a long-term tenant and a high caliber tenant in particular, that can make the lending criteria even easier to acquire again.
Absolutely. And because we're running our own businesses out of these dwellings, it's an easy first step into the commercial space. So I'm sure a lot of business owners are going down this trajectory and have in the past and will continue in the future. But as Nevada said, getting the right tenant is going to give you that confidence on leases, and that adds value to the property. The quality of the tenant does impact that value of the property over time.
Just a quick note with commercial as well. Like I said, there are some key differences when it comes to lending. Generally, the deposit requirements are a little bit larger. This income or serviceability is probably a bit more reliant on the tenant in certain aspects. If there isn't a tenant in place, there's probably a large amount of income required to complete the purchase.
Yeah.
But if you have any specific questions and want to explore what your capacity is in the commercial sense, feel free to reach out. Happy to have a chat.
Yeah, amazing. And if you want to have a chat with myself or the team at Purpose Property, if you're looking to buy in Brisbane, Greater Brisbane or Greater Melbourne, head over to purposeproperty.com.au for a chat there. We'll see you in the next one.
Thanks, guys.
Peace.